Good afternoon. This is Ron Brown. It's Friday, the 28th of March, 2025. There's 16 minutes left in the trading day, and I want to show you how I use HCSI intraday. I've covered some of these things before, but I want to go in and reinforce. It's a brutal day in the market, so it's a good day to show you some of the things you can do with this software. As always, remember the market is your teacher, and we're learning that lesson again today. Here's a risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used to your own risk. At your own risk. If you don't have the software, you can go to highgrowthstock.com. You'll see a link where you can get a trial for 30 days and give it a try. Then hopefully you can discover how powerful this software is. I'm going to begin in Thinkorswim just to show you where we are today. This is a daily chart on the right, and this is a weekly chart. And if I put the crosshair right here on the weekly chart and go back to this point here, you can see that the NASDAQ composite has given up everything that it's gained since the week of 9/16, actually on the daily chart, and this is just a 3-month chart here. Let me see if I have a 6-month daily, and I'll maximize the sell. 6 months doesn't do it. I don't know if I have a yearly here or not. There we go. Okay, so at the low of the day, or any time today, if you look back here to the left, you'll see this is where we are, and if you look down at the bottom, you'll see that that was September 11th. So all of the gains from September on are now gone. And that really doesn't tell the whole story, because a lot of stocks have been brutalized and have given up much more of a percentage loss than we're showing here. Now if you come over here and look, you'll see that we're down 2.81% at the moment, 500 points right there on the NASDAQ composite, and it's trading 4.87% off of the low of its daily range, now 5.2, just coming back just a little bit. But anyway, it's been brutal, and what I like to do is I like to be in HGSI and use the scans that I've created and look at money flow. These are my scans right here, and I like to go into the second category. Intraday stocks are updating right now. And open this folder, and as you can see, I have a lot of different scans just contained within this folder. Now I'm in all securities, but let's drop into the major market components here, the S&P 1500, and I'm going to go down here to the price change up intraday stocks and groups, and if you look up here in the corner, you'll see 193 up and 1268 stocks within the S&P 1500 are down, so I can get a quick read on the number of stocks up compared to the number of stocks down. And it is overwhelmingly to the downside. Now, I'm just going to stay in here in the S&P 1500 and take a look at this and just go to the regular industries, and you can see where the strength is. REITs, integrated utilities, utility networks, packaged foods, PC insurance. What are these? These are defensive groups, defensive stocks. These are the ones that are up. Now, if I drop down here to stocks and groups that are down, you can see the slices are much thinner. We have a lot of REITs down there also, but banks are leading the way down, and then application software, semiconductors, PC insurance. There's a lot on the downside also, but The biggest groups are application software. Other than the banks and the REITs, you can see that the tech stocks are very weak here. Now, you can look at major industries, and you can also look at sectors to see how it's broken down here. On the downside, financials take up 282, or they're 22.2%. Consumer discretionary, these are on the downside. Technology 181, industrials 164. Now let's just look at the upside. And we're going to have stocks in all of these sectors too, but the numbers are totally different. 57 in the financials, utilities, 45, healthcare, go down to technology. There's only 4 stocks within the sector that are up. So that's the way I just use the pie slices to get a quick read on what's going on, just to get a feel for it more than anything. Now what I'm going to do is I'm going to go into my designer and I'm going to go to industries and sectors, and I'm going to rebuild indexes in the group. It's taking the latest data from Thinkorswim when it was just updated, and it's building the industry groups for me. Takes about 30 seconds on this computer. Okay, now when it's done, then I go back up here to the top and notice 01 is intraday money flow in, all securities, industries up. I'm still in the S&P 1500. If I go to all securities, I'm having trouble finding it today. Here we go. No, I grabbed the wrong one. All securities. You can see there are 337 securities up, and these are sorted with the combo on the industry price change percentage in 1 day. So let's make this full screen, and this shows me immediately which stocks are up or showing money flow in, and they have to have a daily range of at least 50% to be included in this, and the volume is not really factored into it. So it's price and range. You can see a lot of these, the volume is very, very light on these. So I used to have a volume requirement several months ago, but I decided that was too restrictive. So I just require the range to be 50% or greater with a price that's up. So there's 337 in all securities that are positive. And if I drop down here to money flow out, you can see they can hit the hardest over here because this is sorted by industry group. This is all securities, the index up here. So rather than looking at the pie slices, you can actually come in here and see where the money flow is based upon negative range below 50% and negative price. Seeing a little bit of buying coming into the close. I'm looking on a different screen. Their daily range is now 11%, so there's some positions being closed. But anyway, it's still a very brutal down day. So looking at this, and I'll just stay here in the money flow out, you can see engine and transmission. The group is down 7.2%. Factory automation equipment, probably only one stock in there. It's down 5.47. Biofuels, cruise lines, material handling, specialty apparel stores, RVs, semiconductor devices, just getting creamed today. Internet media, infrastructure software. Now let's go back to number 1 on the money flow in, and you can see there are a lot of conservative, less risk-averse groups here. Large pharma, integrated utilities, utility networks, beverages, marine shipping has been, it's negative for the group, but you can see there's a lot of individual marine shipping stocks in here that are positive. PC insurance is down slightly, but there's a lot of PC insurance stocks that are up today. Now, when I do this, a lot of times I like to do a secondary sort. I'm going to sort on raw combo, and remember, I'm sorting on the industry group. But I'll just type the word range in here and click on intraday range. And then what it does, it stacks these according to the industry group and then according to the intraday range. So I can tell in this marine shipping group that FLNG is trading at the highest intraday range compared to all of the other stocks in its groups, in this group. So let's go up to large pharma. You can see that Bristol Myers is trading at 98.88%. And there's the closing bell. ABBV is trading at 87 and so on. So what do we end up with here? Let's just do a quick update with F5. The NASDAQ closed 8.31% off of the low of the day, or its daily range is 8.31, I should say. Okay, I'm doing an update here. Okay, so the market closed 364 up out of all securities with the money flow in and the money flow out 26.79. So it's a very brutal day. Now let's look at some of the other things in here. This is sorted on demand. So this combo brings stocks to the top that have strong demand based upon the percentage price change, the volume, and the range up. And you can see this Aura Biosciences is up 6.73 for the day at 96% of its day range. And the change from the low to the last, 8.38, and heavy volume. This is a biotech stock. But then you look at it and you realize this is a stock in a strong downtrend, stopping volume on 2 out of the last 3 days prior to today, and then money flowing into today. So this is just 1 day demand. So in the first group that I looked at, sorted by industry, we get the demand based upon the industries, based upon the percentage price change. But this one here bases it on this intraday combo. And what do we see over here in this group? We see a lot of biotechs, highly speculative stocks, of course. But you can see there are a lot of biotechs where there is individual demand. And that holds true pretty much every day. Here's one that's up 0.63% today. It's another beaten down stock. Here's the weekly chart. Here's the daily chart. But something must be going on with this stock to drive it up here, because you can see there are 1, 2, 3, 4, 5 days of volume pocket pivots, stopping volume, and the 3 went above the 6 yesterday on this right here. But it's still a very cheap stock. This column right here tells you the last price. These are important columns here because it tells you the days since the 3-day cross over either to the upside or to the downside. And this is the volume point of control, either to the upside or to the downside. So if I'm looking for stocks that maybe just are beginning to move, I like to look at 0 crossover days. So this would be 0 as of yesterday. It's up 3.74% today. It's a $48 stock. Let's look at California Water Services Group. Okay, so you can see that it crossed over yesterday was a zero crossover day. Well, it's hard to see. Right there, you can see that crossover. This chart I'm using just has a 3-day crossover, but here's a strong day, crossed over yesterday, and it's following through today. Now, what I like to do if I'm somewhat interested in a stock, I'll drop down, or I'll move from this one, I'll move up 1 to 2A, the context using all of my moving averages. So you can see that the 3 crossed the 6 and the 6 crossed the 18 today, and the 18 is above the 50 here, so the intermediate term trend held up or what stayed positive all through this. Then there was a pullback here on the short-term trend where the 6 and the 18 cross, and then the 3 and the 6 right here. So this stock has been gaining because the intermediate term trend is up. Now the volume point of control did go negative here on this pullback, and the force index went negative too. And I can see right now that it's running up against the 200-day moving average. The trend has been down. The fan trend has been down, but the intermediate term trend has been up. So on a day like today, this stock is holding up. It's been moving up, and it really got a boost today compared to much of the market. Now going over here to the weekly chart, it doesn't look quite as rosy, but it does show a series of higher highs and higher lows. There was an inside week here, and then higher highs. Here's a lower high and lower low and a higher high, and then it continued to move up. All of this choppiness here in the daily chart is represented in these weekly bars over here. It's not a smooth ride up, but it is heading up as a utility. It is considered to be relatively safe, and it does have a 2.5% dividend. Okay, let's look at a few other things here, and then I'm going to go look at the market charts. So I have money flow in, industries up, demand. These had a VPA flag yesterday. If you look here, the VPA flag was not necessarily bullish. The requirement is that there is a VPA flag. And this group right here is money flow in intraday with a negative price. And so with this scan, you can find stocks that sold off. Look at these, a lot of these gap down, and there's money flowing back into them as the day goes along. So this one closed at 87.5% of its daily range. Let's bring it up here. Gets this out of the way. I would immediately disqualify it because the fan is down. 200, 150, 18, and the 3 is right at the 6, but this is in a strong downtrend. So it has been down, but it fought its way back to the upper part of its daily range. I could have looked over here to see the relative strength of 8, and I really probably wouldn't have looked at it, but it was at the top of the list. Let's take a look at this. This is in the auto parts with the Trump tariffs going into effect. Demand for used cars has gone up and keeping cars on the road. So this is a possibility here. It's got a strong RS, and look at this. It crossed over 12 days ago. The 3 and the 6 had a little pullback and is going up again. Weekly chart shows a series of higher highs and higher lows. Had a shakeout here, but we're seeing higher highs and higher lows again after this massive sell-off. Quick look at the fundamentals, you can see that the earnings growth was negative, and it's been positive the last 3 quarters. And there's some serious revenue here, 564 million the last quarter. So this is one that could go into a watch list. Okay, let's go back to this. And I have the same on the down. Here's another one. Intraday demand, no biotechs. That's 1D. I just wanted to take out the biotechs because there are so many biotechs. They just kind of dominate the stock. So this eliminates them. And then these are to the downside. It's the same sequence except down. Now, if you want to just stick to sector stocks, the stocks that make up the sectors for the S&P, you can just come down to this group. This is all self-explanatory. So these are well-known names, the large cap stocks. And then here's one that has the sector stocks and ETFs combined. You can look at both of those together. If you trade ETFs, this group trades weekly options. If you're an options player, demand, money flow in, money flow out. You can see the money flow out is dominating this. This is both ETFs and stocks. And here's HES box stocks for people that like box stocks or stocks with consistent earnings growth. You can see that there are 49 to the upside and 499 to the downside, 10-to-1 ratio on that. Okay, this is all securities. Stocks up, stocks in groups, 491 up, down, 3122. These are assigned to HESI industry groups. And then there's money flow ETFs in and out. Spider ETFs, nothing up, 10 down. And then here's a couple that I don't really use that much, but a bar chart, I did a scan and put their stock options in a folder, and it goes directly to this demand. I use it primarily for timing or to see the breadth, 31 up and 409 down. And then this here is just for the industries up. You have to go from all securities to industries, and I had to apply the filter. You can see that there are only 4 industry groups up for the day and 165 down. Now, on a day like today, this is extreme. Other days, when I rebuild the industries and I just want a quick count of the industry groups, I use these two applied to the industry group folder. Yes, there's a lot of information in here, a lot of different scans and so on, but I think they're pretty well or pretty self-explanatory. And I use the top ones most of all, but if I want to do something more selective, I'll use one of these other ones. Now, I'd have to get out of industries, and a lot of times I'll just go down into my major market indexes and concentrate on the S&P 1500 or 500 rather than the entire market. Okay, everything is updated, so what I want to do here is I'm going to go into my major market user groups, and I update these, try to keep these updated pretty regularly as stocks come in and out. So this is the major markets updated weekly. This is equal dollar weighting, and this is market cap weighting. Since the stocks have all been updated, I can go under my tools and I can select rebuild indexes in group, And what it's going to do, it's going to go in and rebuild all these indexes, plus the industry groups. I have the industry groups in this equal dollar weighted, and I'm just going to let this run through, and then we'll take a look at some charts. I'll pause the video while this updates. Okay, it's updated. I'll click through. Oops, wrong. Go to the warehouse view, and now I use the drop-down menu, and now I want to go into my top-down process views, and I'm going to be working with HDSI generated indexes. So I'll just click on their percentage price change, and remember this is equal dollar weighted, so these will not be exactly like the well, they won't be like the market cap weighting, but still I can really get a feel for what happened in the market. And I do this several times intraday just to stay on top of it. And you can see that every one of the indexes have turned. The 3 has gone below the 6. Here's the percentage price change one day and multiple days. It just hasn't been a good month. So before I get in, or I want to analyze these, but what I want to do is I want to bring up my charts, HDSI index charts, and I can do the same thing here. We'll have 2 different charts here. I usually start with the S&P 1500 because it contains the 400, the 100, small caps, mid cap, and large cap stocks. So let's get this out of the way. And here's the S&P index. Now you can see that as the market was coming up here over the past several days, that the D distribution or the E distribution peaked clear up here, and it was coming down. In fact, it actually crossed the A accumulation down here as the market was preparing or repairing itself, not preparing, and it looked pretty good for a while. But over the past several days, it's just gotten hammered. Now I'm going to actually, I think I'll just stick with one chart and make it full screen. So let's stick with the S&P 1500. You can see the rotation here, A, B, C, D, and E. And it's starting, the rotation's starting to go the other way now. I just take a quick look at some of these. Here's Chaikin. You can see that it looked good in here, except for the past several days, and now everything is rolling over. This is the AD line on the S&P 1500 today, and if you look over here, I'll bring up an arrow here. You can see declining issues 1290, advancing 206. And the advanced decline volume was 0.13, so it was nearly 10 to 1 on the downside volume. And you can see the AD line, it was rallying here during this period, but it's rolling over again. And this is a percent above the 20, 30, 50, and 200-day moving averages, and you can see that this has been a long decline here below the moving average on the 200. The market never really gained a lot of strength. Now, I'm going to back out of here, and when we have a strong market, I pointed this out before, when we have a really strong market, you're going to see all of these stocks within an index jump above their moving averages. Of course, it'll start up here and then followed, if you follow it down, and finally get down here to the percent above the 200-day. When you have a strong market, this is going to be lifting up away from the moving averages. But it's been a lot of chop, as you can see, which is reflected down here in the market. Then we had the big sell-off here. It rallied up, and then over the past several days, it looked pretty good here until the last. This part looked good. On the upper ones, notice how pretty strong up here, but it didn't move much down here when compared to the 50 and the 200. Potential buy-sell signals. Well, we definitely got a sell signal today on the S&P 15. These were tentative buys here. They weren't strong buys. They didn't go dark green. I don't see a dark green in here, in fact. Clear back here. You'll get a dark green when the advancing issues versus declining issues are at least 5-1, and that's confirmed by 5-1 volume. That didn't happen here. But on these 2 days, these were tentative buys or potential buys. This one here, yellow, was a warning that the market may be changing. And then here we have a strong sell because the decliners, of course, were more than 3-1, as was the declining volume versus the advancing volume. So dark red bar, it's on a sell signal now. Look at the moving averages. Here's the 100. Here's the 50 and the 200. Just a really rough market right now. This is the same thing without the moving averages. And this is the AD line and the percent above the 50. I just like to spread these out a little bit or to look at them together. The AD line and the percent of stocks above their 50-day moving averages. And this chart gives me all the information that I need about the internals of the market. This represents what happened today. Only 13.37 were advancing, 86% were declining, and here's the actual numbers. Here's the accumulation numbers. Here's the 52-week highs, 1.33, compared to the 52-week lows, minus 83. Just a lot of good information here about accumulation and trends. Force indexes, the 13 and the 2, both turned down today. McClellan oscillator, you can see it was moving up, but it's rolled over the past few days. And this was strong. The accumulation was really looking good in here, but now it's, so you can see it went from E to D to C to B, didn't quite get to A, and now it's the lines, the blue line is in the black area, but this is today. It went from, well, it remained in, this is a slow moving indicator. It takes a while for this to turn one way or the other based upon different levels of accumulation. I just glance at it. The other charts I showed you before are more important than these are. Now this is a weekly chart. And like I pointed out before, these are white over here because we need 120 data periods before we start getting any signal generation on the VPA. My most used charts out of this bunch are, I like to look at this one, and then I'll go down to this one to look at the AD line. And then this one I use a lot because it shows the stocks above their moving averages. This one, of course, I like a lot because it gives me, these buy and sell signals don't always work, but boy, they worked here and here and here and here. Not bright red, but weak sells. And then I take a quick look at that, and then this one right here. I come and look at it because it really gives me a breakdown of everything as far as the internals go. So before I leave, it's getting a little bit lengthy, but I want to go back into my main chart here and look where the comp closed. Let's look at the 6 month chart of it, and you can see that it was brutal. I mean, this when it was in this range, I think it was down around 10%, and it's down another 2 points or 2.70% today. So there's going to be a lot of people feeling pain when they look at their portfolios over the weekend, and we'll see if we get any kind of rebound on Monday with these tariffs hanging over us and the consumer confidence being so low, and I don't know. There's just a lot of negativity out there, and of course that doesn't mean it's always going to go down, but there's a lot of headwinds right now. So be careful with your capital. If you're in cash, great. You're earning money market funds or fees. You're earning something on your money at least, rather than getting hammered in the market. Thank you for listening, and if you don't have HCSI, get it, give it a try, because it is extremely powerful. You can see what you saw. I hope you saw me demonstrate today what I do with it, just to get a great insight into the market. And I do a lot more things, but I can only cover so much in a single video.